Well, let's head to Egypt now. The country has reached an initial agreement with the International Monetary Fund for a loan worth more than 12 billion US dollars. The money is meant to help revive the country's economy. Now, the Egyptian government has assured the IMF it will implement required economic reforms as soon as possible. Officials say the deal will help to restore confidence in the economy, which has been hurt by years of instability. Egypt's economic revival plan includes cutting electricity subsidies and curbing wage increases. The central bank is also expected to devalue the local pound to end an ongoing dollar crunch that's been hampering economic activity. Now, to get more insight into this, we're joined by Yasser Hakim, joining us from Cairo, and Daniel Ringes in Washington, D.C. Welcome both of you to the show. Yasser, I'll start with you. Now, we know Egypt's government has failed to reach a deal with the IMF twice before, but they have reached a preliminary agreement this time around, though no deal has been signed just yet. Any insight into the terms and, of course, how this is being received in the country?
Well, Uche, first of all, the terms have not yet been announced, but we've heard that it could be there could be a grace period for a few years, maybe 3 to 4 years for repayment, and the repayment will be over around 20 years and at 1 to 1.5% interest rate. You said that there has been 2 failed attempts with the IMF in the last few years, and that's because of the public outrage at the IMF. IMF is not popular with the public here because of the austerity measures that come with any deal with the IMF. That's happened in the early 1990s and also in the early 2000s. There were 2 deals there, not as big as the $12 billion this week, but yet there was always a stringent economic plan with it that had its burden on the Egyptians, and this is the same here. So maybe the government has looked at it and announced the news in a kind of a victorious way, showing that it will be good for the economy, good for the country, good for investment. But with the people, it's something different. They know what comes with the IMF loan will be more hardship for the Egyptians, maybe with the when there's less or reduction in energy subsidies, higher electricity prices, which was announced just yesterday. Electricity prices are up, and this is no coincidence. It's happening just a day before the IMF deal is announced. So this is the reaction in Cairo at the moment.
Well, Daniel, I mean, what's happening over at the IMF? They haven't said much about the deal. We know they're still discussing it. Is it clear what the conditions are this time around? Does it look like the deal is moving smoothly? What are your thoughts?
Well, firstly, on the politics of it, I think what the IMF is trying to emphasize is that a lot of the reforms that they are recommending have already been approved by the Parliament or are in process by the Parliament. So they're trying to undercut that criticism that came to them on the last 2 occasions, which was a violation of Egyptian sovereignty. As to the details, I've got a few details here. One of the main goals is to reduce government debt from its current rate of 98% of GDP down to 88% over the 3 years of the loan. So that's a key goal. How are they going to do that? Well, they're encouraging, supporting the idea of VAT, a removal of energy subsidies, but at the same time, again, trying to be sensitive, saying that they want to ensure that the Egyptians continue to spend and invest in social spending, education, infrastructure, and all those things that will help future growth and to protect people during a period of transition. Along with that, as you were saying, the exchange rate is a key issue. They want to see a loosening of controls there in order for essentially the country to become much more competitive on the global stage, to encourage exports, to encourage tourism, to encourage investors, for the investment community to be much more positive towards foreign investors and to domestic investors, and to see both some public sector financial reform and some private sector reform, to particularly for the banks, to encourage that sense of stability in investors and to continue to see growth, jobs growth in the country, despite the fact that they're going to have to make some painful concessions, to make some cuts in order to reach the debt levels that they think are sustainable for Egypt. Back to you.
Now, on that note, I mean, yes, a lot of these conditions are in line with the government's plan to restore macroeconomic stability in the country. Now, analysts are expecting another devaluation of the pound soon. Any update on some of those reforms and plans that the government is putting in place?
Yeah, yes, Uche, just like Daniel's just been saying, that the foreign exchange is a main focus by the IMF, and it was mentioned in the IMF report that was delivered to us today. And just a few moments ago, the central bank governor, Tariq Amir, has just, we've known that he has summoned all the CEOs and presidents of all the 38 banks in Egypt to a meeting on Monday. So they will all be there, and what we know is that obviously this IMF deal is the top of the agenda, if not the only topic on the agenda. And what to do with the Egyptian pound at the moment? Will they go to a flexible foreign exchange market, or devalue the currency, or reduce the currency on like 3 to 4 quarters? There's been saying that maybe in the next 2 to 3 quarters it will go down by 10% and then 20 to 30% by 2018. This will be discussed in the meeting. Also, how to crack down on the black market, probably pump a large sum of dollars into the market to balance the price against the black market, and also to lower the price of the Egyptian pound at that point, and to try to kill off the black market. So this will be discussed in the meeting on Monday, and we expect an announcement on that day on what will happen with the Egyptian pound as we go forward.
Well, many thanks, both of you, for those insights. Of course, Yasser Hakim joining us there in Cairo, and Daniel Ringes in Washington, D.C.